money. Which two accounts are impacted? Cash and payables. Okay? Yes, because we're going to go ahead and pay him what? Cash of how much? $900. So here, the transaction is, well, actually, we start with the transaction of what? Accounts payable. We have to debit that. So what are we doing for, so this is going to be what? Positive or negative? Negative, because it's going to decrease now because we're paying him part of that $2,000. Okay? So that's going to be negative. Then what? We're going to go ahead and take it out of cash. So that's not going to be positive. We're not increasing cash. So we're going to do what? Decrease again as well. So see how two accounts are now decreasing, and that's allowed. That makes sense. So everything else is zero. We didn't do anything else. So what's our balance now? We are now taking another $900 out of $1,770. So what is our balance now for the $16,800? Are we okay? Right here, yeah, because we went ahead and it says we are paying on that account. We're paying on this one. So we're going to decrease the cash, and then we are also going to decrease the accounts payable. No, because remember, this was accounts payable. This is how much we owed. The cash? Because we're paying him now. Oh, it decreases. If we pay it cash, we're decreasing. We owe, this is, yes, we owe the payable. Yeah, let me go ahead and mark that out. We pay it from cash. So here we go. We have accounts payable. Okay? Debit, credit. How much do we have here? It increased. So we have what? $2,000 here. This is the normal balance. Here we have cash. Okay? Cash, we had $1,770, right? Debit and credit. We are, and this is for Ryan, okay? Ryan's company. And we have a Ryan in this class too. So anyway, we now have to pay Ryan to decrease. It's like when you pay on your credit card. You're decreasing the balance, okay? And this is accounts payable. So we're going to subtract $900. We're going to debit $900 from accounts payable, and we're going to credit cash. So we're going to take out $900 as well. So when you subtract the 900 from the 2,000, how much do we have left? We have $1,100, right? That's what our balance is. But now we're going to go ahead and take it out of cash. And we have how much left? Easier to see now? To pay the payable, correct. Okay? Everybody got it? Yes? Easier seen this way, right? Okay. So that's why. Now, there were no other transactions, and notice that the next transaction starts in November. You could go ahead and do all the transactions if you wanted to, but it says that we now have to create a balance sheet for each month. So what is the balance sheet going to look like? Well, if we go into sheet B of your workbook, ta-da! We have all of that. It's already set up for you. Can you imagine if you had to create the whole 9 yards? I used to when I did accounting right after dinosaurs ruled the earth. I had to do the whole thing because we didn't have computers back then. No, we were just starting out with computers. Anyway, so what we have now, notice what it says. For the balance sheet, we have assets on the right and we have liabilities and owner's equity. Just off the top of your head, what assets do we have from what we just did? We have cash and office equipment. So what we're going to do is we're going to put in cash and office equipment. Then we're going to go back to the worksheet and we're going to find out what are our balances. We have 16,800 and 4,300, right? So we go back to the balance sheet and what do? Cash is 16,800. How much is the other? $4,300, right? Okay, so, and we have 0 in accounts receivable. We don't have anything. Now, liabilities. Let's go back to A. We have what? Accounts payable. That also goes on your balance sheet as well. It's a liability. So you're going to put in how much of a liability we have. An accounts payable, and that's going to be what? We owe 1,100. Accounts payable. And we owe $1,100. We do not, the other thing that we put in though is if whether or not we have any withdrawals. We do not have any withdrawals whatsoever. So you can put the account of withdrawals and put the 0 in if you want to. That way it looks like a true balance sheet of 0. Then after that we do what? We have the capital, right? And how much do we have in owner's equity as far as the capital account? How much did we invest at the beginning? Let's go into A. $20,000. Remember? All right. Now, remember, both must balance. So here we're going to put in total assets. What does this add up to? $2,100 or $21,100. 20,100. Now, when we go to this opposite side, total what? What should this be? Total what? Total liabilities and owner's equity, because that's what we have, right? Liabilities and owner's equity. This, we just have total assets. So it's total liabilities and owner's equity. And what is the amount? $2,100, right? Magic! They both balance out for October. Yay! Questions? Are we good? The what? Yeah. For which one? Yeah, yes. Yes. All right, so what we're going to do is we're going to go ahead and make sure that you save. How do we save? File. Save as. If you already have your place where you're doing it, then you go ahead and make sure that you save, right? And click save. If you've already, even if it says if it already exists, save anyway. And later on, what you can do is just hit that small little diskette, save icon, a floppy disk one on the top. Yes.
One thing to note is that on the balance sheets later on, the withdrawal will not be on.
Oh yeah, that's okay. That's
It'll
okay.
be on
Don't worry
your
about it.
plan. That's just for your.
Okay? All right. Let's go ahead and take a 5-minute break because we still have to do November. We're not done.